really at the foothills of a substantive move in silver into the end of the year.
I've always wondered how deep the silver rabbit hole truly goes.
There's a trench, a Mariana Trench, and it goes down, I don't know how many miles, but that thing, you go all the way down there, and there's the bunny rabbit holding the silver dollar.
Yeah. It's like if you were president, what would your solution be? Like really think about this. Like
The first thing you have to do is stop.
thank you for tuning into your daily silver news. If you want the latest information of what's happening all across the globe on a daily basis and how that affects the price of precious metals, then make sure you click subscribe. We are here with the man, the myth, the legendary Andy Schectman for another episode. It's really good to have Andy back. It's good to be back in general. So, Andy, what's up? It's good to see your face.
Yeah, brother, it's been way too long. It's good to see your face too, and you're looking good, man. It's good to see you.
Thanks.
Thanks for having me back in.
Yeah, man. So I put together a couple of different things to talk about. First and foremost, though, obviously you're the CEO of Miles Franklin. If you guys wanted to purchase from Andy, you can send an email to info@milesfranklin.com. Let him know Slayer sent you. It helps me out, helps Andy out. Weekly specials, great company, very trusted, reliable. So info@milesfranklin.com. Let him know I sent you. So Andy, what's up right now with silver hitting 13-year highs? What do you think's going on? Where do you see silver going?
Yeah, silver at 13-year highs. It's the third time, to my knowledge, in history it's ever been this high. To me, the biggest takeaway from the price appreciation, and I'm not crazy enough to believe that we won't see corrections along the way, or it'll be easy, is that we're seeing huge deliveries into COMEX preceding these price rises. And although we're seeing the commercial bank short position creep up again, which makes me nervous, when we see the largest delivery in the history of the COMEX market happen for silver and gold in the May contract, it tells me that the people who are not only sophisticated and wealthy enough to do this and to stand for delivery and to remove counterparty risk and to say, we don't want to play the long game with contracts, we want to stand for delivery instead, is a big deal, because these people know the information. They're closest to it at that level. When you're talking billions of dollars in gold, as an example, in the May contract, we saw pretty damn well near $9 billion worth of gold stand for delivery, the largest ever in the May contract. But this has been in both gold and silver a continuing pattern that we've seen really since November. Now, of course, when you talk about on a larger scale with silver, we're seeing things happen around the globe. Of course, we talked about at length over the last several months how Russia has said, look, we're going to add it to our strategic stockpile. India has been buying silver for 5 years at a clip that really no one's ever seen, somewhere north of 800 million ounces, which would be more than the LBMA has in total, or pretty damn well near what they have in total. We're seeing China, the second largest producer in the world, fly all around South America, in particular Latin America, like Peru, that area, which is the second largest producer, or the third largest producer of silver in the world, is Peru. They've already built a deep water port in Peru, and they're doing lots of trade with them. Well, now they're going directly to the miners in Peru, and they're buying what's called doré and concentrate directly from the miners. And they're paying double what the West will for it. Doré is a crudely refined bar, as you know, and the concentrate is a sludge byproduct of mining. And they'll buy this stuff, pay double what the West will, and ship it back to China for refining. The thing that I take away from that is this is the second largest producer of silver in the world, buying from the third largest producer, but buying directly from the miners, which disintermediates the marketplace, which disintermediates the information flow. How much are they buying? What is that turning into? What are they paying? We know they're paying more than the West, and we know that they're incentivized to ship this unrefined silver halfway around the globe, refine it, which is kind of strange when you think about it coming from the second largest producer of silver in the world, that being China. So it's an interesting situation to say the least. But what's different, Slayer, about everything else is that the US is now involved and importing copious amounts of it. Who's importing it? Who's responsible for taking delivery of the largest delivery in the history of the COMEX? That's a question that really no one can answer at this point. Well, some can, none of us can, but I think it's don't pay attention to the price, even though the price is going parabolic. Parabolic's not the right word. Let me rephrase it. The price had a parabolic move in a very short period of time. Now, parabolic, that's not even the right word, I guess. The more I think about it, it's up 40% this year.
Right.
It's
Right.
outpaced all the other metals. So that's not really parabolic, but it's strong. It could be the parabolic move coming that we're all expecting, where it blows through 50 and then keeps on going, just based upon the price ratio of the
Yeah.
past 100 plus years.
And there's no resistance between 36 to 50. If we would have seen 42 before, 47, then it corrects back down to 45, there's no resistance between 36 to $50.
No,
Last
there's
time
not.
it hit 36, it went to 50.
Well,
And we're
the
talking,
crazy thing is coming out of the ground at 7 to 1, but it's priced now. It's broken that 100 to 1 ratio level down in the 90s. But if you look at what it's averaged, its price average, literally the last 100 plus years, it's about 45 to 1. So if you take gold right now at 33.30 and divide that by 45, 33.30 divided by 45, you get $74.
yeah,
So silver should be $74 an ounce. Now, that's 6 times higher than it's coming out of the ground at. So 33.30 divided by 7, according to Keith Newmeyer. And what do you get? You get 33.30 divided by 7, 475. Now,
yeah,
if you told me silver was $475 an ounce next year, I would say that's pretty damn aggressive. Probably not going to happen. But from a standpoint of its ratio in relation to how much gold versus how much silver is coming out of the ground, I guess it would be a logical statement. But to say that it's priced right now at a 92 to 1 ratio, um, with the demand that we're seeing, I would say it's the value of a generation. And I think it's just getting going. Now we'll see what happens here, but I really think we've seen a weekly close above 36. We need to see it close monthly above 36.
yes,
$35 level. The interesting thing about that $35 level is that there have been, I want to say, let me see the number. There have been, I want to say, 7 attempts, 7 breakout attempts. That's right. I wrote this down the other day. 7 breakout attempts at 35 since 2011. They've all failed. The fact that it's broken out above 35 right now is a significant event. And we'll see where it finishes here. We got the Fed numbers coming up and the non-farm payrolls, all of the key pivot points where the players like to suppress and short the price and knock it down. But there's so much physical demand right now that's standing for delivery. It's as stupid as a mud wall to be on the wrong side of this in a naked short position. And I think the traders are figuring that out in gold, as we've seen a tremendous amount of gold covering. Since the beginning of the year, nearly 150,000 COMEX contracts have been covered. That's 15 million ounces of gold. And this is why we see gold continuing to march higher no matter what the news is. Silver will follow it. And it has a very, very similar technical pattern the way that gold has. In
yeah,
fact, it's
a little more
covered
volatile.
almost 45 years long.
Yeah. Yeah, I call silver gold on steroids. And I say steroids specifically. People don't understand why. Steroids have not negative side effects too. It's more extreme. It hits higher highs, but also lower lows. That's why people say it's a little riskier. You can't, it's so stupid calling a safe haven asset risky. But yeah, silver, it's like a more exaggerated version. Of gold. When people talk about the gold to silver ratio and do the numbers, I always start with $5,000 gold because for me that doesn't sound crazy at all. Like if I could see gold going to $5,000 with the ratio at 16 to 1 or 7 to 1 or whatever, we're talking about a lot higher of silver. And I've always said for years since 2019, people have asked when I think silver would quote unquote explode. And I've always said by the year 2025, 2026. I've been saying that since 2019. And it's just because of everything, the numbers add up from the shortage, from the supply deficit. Everything looks like in the way we're going green right now. With UK just announced they're mandating every single home now use solar panels, which is a huge deal. And we're going to see more countries doing that. It's the way we're going, it's just not realistic to be able to keep up with this type of demand. And investing 101, low supply, high demand does what? Shoots the price up. You could try to suppress it, but eventually that's going to crack, especially right now with the COMEX as well. Why do you think all these people are, all these countries, the biggest banks, the most powerful countries, the wealthiest people are all buying silver? They know something, you know? So,
Well, you're right, and standing for delivery. And look, right now, look, $3,500 gold is easily in play, right? And a 60-to-1 ratio would be above the 200-year average. And that 60-to-1 ratio at $3,500, you're basically $60 an ounce silver. So these numbers are not unrealistic whatsoever. You put it at $4,000 an ounce, you're at $70 an ounce silver based upon, and that's nowhere near the mining ratio. That's just historical averages.
right,
You
right,
get up to
right.
5,000 and the numbers start to move. Look, the we've talked about this at length, and we also talked about how the guys at silverwars.org have done a good job at
Yeah.
showing how much silver is needed in the military industrial complex, who has had vested interest in perpetuating war. And in order to do that, you need to have silver to make high-tech weapons. And it's interesting when you look at who's behind all of this. Well, I got this thing sticking out there. You look at who's behind all of this, and um, BlackRock owns the military industrial complex.
Mm,
BlackRock owns all of the military contractors that make all of the high tech weapons. They also are the primary custodian with J.P. Morgan in the silver ETF SLV. They're major holders in PSLV. They have their fingers in the pie of not only the silver market, which is used certainly to build these high tech weapons, but they also have their fingers in the pie of the military industrial complex, the companies that are making the weapons. So they suppress the price of silver to make the weapons. They sell them all around the world. They blow up countries like the Ukraine, and then they come in and get the reconstruction contracts. BlackRock does. It's a let's build the weapons, blow up the country, come in and get the reconstruction contract. Sounds like a great deal, and then sell that country that's been rebuilt weapons to protect themselves moving
right.
forward.
Yeah.
It's a crazy roundabout, but that's what's happening now. That works in an environment where the dollar has no challengers. That works in an environment where the dollar and the U.S. government are respected. That works in an environment where, you know, we are not the most indebted country in the world with all sorts of problems at home. Not only with debt, but look what's happening in Los Angeles and
Right.
in Dallas and in Austin. You have again more insurrection, and I don't know. The idea here is that the biggest money in the world has been accumulating gold and silver and taking possession of it.
That's
That's
the
what's
big
different.
part.
It
That's the
is. It's
big
what's
part.
different. No one's ever taken possession quite the way that we're seeing right now, and that is the delineation between the ability to suppress the paper price and not, because you can suppress the price if no one ever stands for delivery just
Yeah.
by writing and creating money.
What happened last time we saw something similar? The highest price silver's ever been till this day, the Hunt brothers. Last time. That's not
Well,
a coincidence.
and it's interesting. You go back to again. I think the highest closing price I think was 2011 for a
It was
brief
higher.
second.
It was higher than 1980.
I think so.
I
For
thought
one
19.
second,
Oh, okay.
I'm pretty sure the closing price.
Yeah.
I could be wrong, but it's really close.
Yeah,
Anyway,
it's like a
the point
couple
is,
pennies away.
in 2011, the dollar index was roughly 76, 77, 75, 78. Maybe you can look and see somewhere in that neighborhood. the dollar right now, which is moving down, it's lost 9% for the year. We're still well into the 90s. So, and we have silver at these levels. Now you see the dollar index continue to fall. The sky's the limit for silver when you talk about the strain we're seeing. One of the things that you and I haven't had the chance to talk about is what's happened on the LBMA. Now, I haven't heard lately what the numbers are, but the amount of deliveries coming off the LBMA has been parabolic. That's where most of the silver coming into the United States has come from, there in Switzerland. Now, London is what's called a T+1 settlement market, where T is the trade day plus one is settlement, and the metal should be moving your way on day 3, in theory, right? Well, so much of the metal came in under the guise of tariffs at the beginning of the year. And then I think they caught on like, this isn't just tariffs. There's something much bigger going on here. And they, all of a sudden, the Bank of England says, sorry, we are a T+1 market, but we've had to go to T plus potentially 8 weeks because there's a shortage of manpower and trucks to move the stuff. So you're telling me the Bank of England doesn't have enough in the way of manpower or trucks to move people's silver or gold. Now imagine that you owned the Silver Slayer jewelry empire all around the world, and you sourced good delivery bars, both gold and silver, in London to fabricate jewelry. And you are on a schedule of fabrication, and you're expecting to get these bars in short order, and they say, listen, we're really sorry, Slayer, but we don't have enough trucks to move your shit. So you're looking at maybe 2 months delay to get your silver. Now that's a default, in my opinion. These are the kinds of things that we are seeing as a result of these increasing deliveries. And that's where the game starts to really change for the ability of these companies or these banks or these hedge funds to continue to naked short. Now they have, I believe, got the message in gold. And you can see that by the huge amount, 15 million ounces of gold have been covered since the beginning of the year. The commercial banks, I think, understand that this is not a game to be naked shorted. Now, I don't know what's going on with silver because I see the naked shorting or the shorting on COMEX is still pretty high. There's a theory that has been bounced around by some of the guys on Substack that basically says banks like HSBC have been shorting the paper price of silver on COMEX, which is the price setting mechanism, and then accumulating physical all around the globe in non-price setting venues. So they drive the paper price down and then buy it all around the globe in venues that don't affect the price the way that it would if it was coming off of New York. Now, I think his name is Michael Lynch. It's very, very compelling argument. And the one thing that was interesting is he said this last month, or the last several weeks, when the price had shot up in silver, that they were absent from the COMEX, like the first time since the beginning of the year where they hadn't shorted the paper price on COMEX and the price went up. So you got all of these shenanigans still going on with silver, but that becomes exponentially more dangerous in an environment where the players stand for delivery.
Yeah.
So, that's something to keep in mind as well. We could be really at the foothills of a substantive move in silver into the end of the year.
Mm. Wow, that's really interesting. I've always wondered how deep the silver rabbit hole truly goes, you know?
Yeah,
Like
really deep. There's no light
it's
down there. It's about as
yeah, it's insane.
there's I forgot the name of it. There's a trench, a Mariana Trench or something like that,
Yeah.
which is the deepest part of the world. It's in the middle of the ocean and it goes down, I don't know how many miles, but that's kind of where I think you go all the way down there and there's the bunny rabbit holding the silver dollar.
Yeah, it's insane. That's crazy. So, what do you think what's going on with Trump and Elon? Have you followed any of that? What are your thoughts on that?
Yeah, I mean, I don't know. I think it's kind of sad.
Yeah.
Uh, I've never believed in public, in airing dirty laundry or in resolving conflict publicly. Um, I think that it's kind of sad. Look, I
Yeah.
mean,
What
I
what
don't
about his
know. I
point
mean,
though? What about his point about about Trump pushing, I think is they said $2 or $3 trillion over the next
The big
decade.
beautiful bill.
Yeah,
Yeah.
yeah,
Um, I mean, it's valid. Look, we're a country that's broke and insolvent. He I think they talked about a $2 to $3 trillion goal for Doge. They got a few hundred billion, if that, and they have such pushback. And then you have Trump, who, will his bill will increase the debt by $3 trillion or thereabouts. And not only that, he wants to remove the debt ceiling. Um, that's the problem, is that we've it seems breached the point of resistance and fiscal responsibility. And maybe
yeah,
Elon realized that this is just ridiculous, that we are completely going contrary to anything that we had talked about, anything that we had tried to do. We have gone contrary to it. Um, and threw up his hands in exasperation. That's really the problem, is that, we have a system based on trust, that being the United States and the reserve currency of the world. And we, even in our finest hour of trying to publicly rein in fiscal irresponsibility and employ some form of austerity, we realize that even in that environment we can't do it. So it's certainly good for the gold and silver market, but what does it speak to the value of the dollar going forward? A country that really could never balance its or clean up its balance sheet,
yeah.
normalize it.
It's not possible. I mean, it's
No.
like it's like we're trying to get ourselves out of debt by replacing it with more debt. I always say it's like trying to pay off a credit card with another credit card, and it just,
Well, and then you
so
look at what the Federal Reserve and the Treasury are doing. The Treasury came in and repurchased 10 billion worth of long-term treasuries by creating more debt through short-term issuance. So they issue short-term treasuries, get the money, and then buy back the long-term. So they're just
mm,
front loading it, because it's going out. I mean, it's there's no demand for the long-term debt. They have to come in and retire it, and that's proven by last 2 weeks ago, they came in and bought almost 50 billion in treasuries. The Fed did, scattered amongst 2, 10, and 30-year treasuries. Well, if there's such demand for our debt, why is the Fed coming in when they're supposed to be quantitatively tightening and doing the opposite, and kind of being very quiet about it, so it doesn't appear that we're monetizing the debt again, but we are. um, this is a situation where the indebtedness of the country is really the biggest problem moving forward, because no one wants to continue to hold our treasury debt at these rates, which would mean rates would have to go higher, which means it slows down the economy, which means you see layoffs, which means you see problems in an overextended country that is over indebted and undercapitalized. And
mm.
the distortions that were created through all the low interest rates over these years, the incentivizing of debt, the expansion of industries, all of this stuff, well, it's great in a zero interest rate environment, but it becomes very difficult to service that debt when rates are rising. And you have at the same time the largest amount of mortgage delinquencies, I don't know, since a very long time, the largest amount of credit card debt ever, over $1 trillion. The lowest, pretty damn well near the lowest amount of net savings. So you have a lot of indebtedness, low savings, rising interest rates, lack of trust. All of these things are happening at once. And maybe this is why the big money is front running it by
Seems
standing.
like
They see what's coming.
seems like you understand all this more than anyone else, probably even more than Trump, honestly. Like the way you do I want to ask you, I say that I want to ask you a question. I'm just thinking, you seriously, what do you think would be the best way to move forwards? Like if you were president, what would your solution be? Like really think about this. Like what
You the first thing you have to do is stop spending, and that's just it. And that's the problem. These people get elected by making promises, and that doesn't go over very well. But you can see that the complete and total um, lack of any responsibility, or even common sense in the way that we spend. That we need to uh, drastically shrink the size of government, and let the free market take over. Free market enterprise should take over much of the stuff that the government does. It would be a far more efficient and less costly endeavor. We need to start to pay down the debt. We need to save. We need to exploit the natural resources in this country. We need to do a lot of things, but it's almost like we are getting very well near the point of no return. Now, I want to look at least from Trump's standpoint, because this is the problem, right? The problem is that it's called Triffin's dilemma. Well, Triffin's dilemma says that if you are the world reserve currency, you must always run trade deficits. You have to. You have no choice, because the need for dollars is far greater than you could ever provide just by trading. And when you look at the amount of dollar debt that's out there, there's a tremendous amount of dollar debt out there, Slayer. And, I don't know, the number's like $100 trillion. Countries that want to trade, they'll trade with one another in dollars. They have to repay that money in dollars. And so when you lend money, when money is being lent, it's lent into existence. When that money is lent into existence, if I lend you $1,000, it actually creates more demand for dollars in the future, because you need to pay me back in dollars, but you're going to need to pay me back more than I lent you. Let's say the interest is 10%. You'll need to pay me back $1,100. So there's demand into the future for more dollars. But let's say your company that you have somewhere down the road makes a product and it totally fails, and you go bankrupt, and you were a big client of a bank, and that bank goes bankrupt, because of the depositors are, oh my God, and there's a run on the bank, and the bank goes upside down. And then it starts a daisy chain. Well, all of the people that they owe dollars to, and they can't get their money because that money just vanished because the bank went under, and then it's a daisy chain. This is the whole issue with the dollar situation, why there's always going to be more demand for dollars because of this massive amount of dollar debt. But what happens is you start to see a spiraling, if you will, of a deflationary spiral where one bank goes. So let me put it in an easier to understand context. Silicon Valley Bank failed, and Signature Bank. Now the Federal Reserve printed more money to bail them out. But if that happens around the world, that doesn't work. So we saw that happen with Credit Suisse. Credit Suisse was going out of business, and they had to be bought by the Swiss National Bank, who didn't have enough dollars to bail them out. So they had to go to the Fed and to their swap line and borrow dollars to bail out the bank. Well, what basically happens is that this continues until there's not enough dollars to facilitate, because as de-dollarization is continuing to happen and the demand for the dollar globally is waning, that money is disappearing, because when money is lent in dollars, it creates more. So as slowly as it starts to wane in favor of other currencies or commodities, you have a problem where you may have the inability to get enough dollars in a situation unless the Fed comes in and prints more. And if the Fed comes in and prints more, then we see more inflation, which lowers the value of the dollar to begin with, which raises interest rates. It gets to a point where these countries won't be able to borrow dollars any longer because the rates are too high and it's not profitable. And then the whole thing just starts to collapse. And you can see this starting to happen around the globe. And what the interesting part about it is, someone will say, well, then why is there an uptick in the usage of dollars right now? And that's exactly what you would expect at the ending days of the dollar, as Gresham's law says, bad money chases out good money. So they're using dollars to buy up all of the commodities, to store precious metals, Bitcoin, farmland, whatever it is that are being bought, they're being bought with dollars, which then is hoarding the real assets. We're getting to the point right now where things are accelerating. So I don't know that there's a lot that the U.S. government can do. The first thing they would have to do would be austerity.
So yeah, I wanted to show you something very interesting I found the other day. Let me share my screen. Share. Can you see that? Can you see my screen?
Now I do.
Okay. Yeah, so the other day I was just messing around on Chat GPT. I got the 4.0 plus. I asked it this question. And by the way, when I was asking it questions, it brought up you and Keith Newmeyer. It said, I see you're asking about silver. Do you want me to bring up questions relating to Andy Schectman and Keith Newmeyer? Isn't that crazy? It
That
went
is
through
crazy.
thousands of information, thousands of articles, and you and Keith were the two people that AI. Um,
That's kind of
so
spooky, man.
isn't that crazy? Look, with the short answer, no. I do have enough silver to go green? No, not without major changes. And it goes over all of these reasons why we don't have enough. It's very interesting. But also, uh, I asked it this question as well. Um, Silver price forecast by 2030. Realistic forecast by 2030 based on current trends, expert analysis. So here's the conservative price, 50 to $70 or 50 to 75. Bullish case if shortages hit hard, 100 to 250 by 2030. And then this is bearish case, tech breakthroughs or economic slowdown, which that's not 25 to $40. So I thought that was pretty interesting. And it says 250 plus isn't fantasy if silver breaks out as a monetary plus industrial asset combined. Um, so yeah, it's very interesting to see AI go through all this information and bring out data that we're also, aligning with what we're saying as well, right? Uh, so yeah, I thought that was really interesting, and the fact that it brought you and Keith up as well is pretty. It was funny, and it
It's
was in a
kind of
video too.
it's spooky, man. The whole
No,
the whole
well, I
AI
mean,
thing to me is kind of spooky,
yeah,
but it's amazing. Think about it
yeah,
from the standpoint of a stock analyzer, stock
yeah,
analyst.
yeah,
His or her job is in trouble because that's what I think if you are any type of research job that you used to scan through law library books or try to analyze real estate investment trusts or try to analyze specific corporations or industries. AI can do all of that in a matter of seconds
right,
and far more in depth. It's
yeah,
really kind of crazy to think about it.
it is.
um, but I'm
So
honored that AI knows who I am. I think
yeah.
anyway.
Yeah, no, that's crazy that it was really cool. But yeah, I know you got another show to do with someone pretty big, so we can start wrapping things up. Remember, folks, if you wanted to purchase from Andy, send an email to info@milesfranklin.com. Let him know Slayer sent you. Great company. I will also be posting daily videos continuously, so make sure you guys are subscribed. I wanted to shout out my guy Jason Cotney. He owns this company, Blowhard. If you are in the Midland, South Carolina area, you can hit him up. Andy, it was good to see you. We will be doing hopefully another show soon, and just keep doing this thing. Like you said, logarithmic decay, little by little. So
Little by
yeah,
little, my man, then all at once. That's right. And you can feel the little by little is increasing.
yeah,
It's been far too long. It's great to see you again. And I'll look forward to doing this with you hopefully next week and
yeah,
looking at what the world is doing. And we'll continue to do our thing, man. But it's just great to see you back in action.
yeah, yeah. Same. All right, man. Well, I will let you go. Thanks everyone for tuning in. This is Silver Slayer. I'll see you guys tomorrow. Peace.